Hey guys, as well as only with a chart set video for the crossover date of 6/10/2021. The crossover happens at 0000 UTC, which for now happens to be at 8 p.m. Eastern Standard Time and 5 p.m. Pacific Standard Time, and we're going to get right into it. Disclaimer: the information displayed in this broadcast is known to cause increase amounts of FOMO. Wells only is alone and is not responsible for any losses you may accrue for having weak, poor staking hands. Let's not forget the longer pays better, and so does bigger if your economic mass allows you to do so. But it's important to keep in mind that what is critical is maintaining your duration in the T-share system for as long as possible because that is what ultimately gets you paid daily. And just to get into it, I always like to start things off now with just a fair reminder of how an economy works, and just that we are all one economy, regardless of whether we're talking the lowest level, which is a municipal economy, all the way up to the global economy, right? We're all swimming in one pond. And the important thing to realize from this graphic is the bigger the public sector is, the less there is for us that are not a part of the public sector to generate value. And the thing that's important to realize is the public sector extracts value. It doesn't actually generate value or create value. It takes value. So when this sector is getting bigger, that means that there is less value for us to create and distribute to then apportion to the public sector. So it's kind of like a leech, right, on what the private sector can actually do to generate value. So it's important to remember that. And now we're going to get into the data. And again, this is as of last night's crossover, 0000 UTC. And this chart is comparing the first 443 days live of each respective market, Bitcoin, Ethereum, and HEX, as well as T-shares, in terms of age. And the age is the first 543 days. As of now, Bitcoin is still at zero, and we have about 20 days or so before we actually get a first live market print. Ethereum is at 892 on the index, rounding down, whereas HEX is at 33,086, and the T-shares are at 59,218. Now, this is phenomenal performance because this is HEX out of the gate. This is Bitcoin, or I'm sorry, this is HEX's Big Payday event right here. And it just is up and to the right. And this is the point of me having this curved line here, which is essentially the logarithmic trend line of HEX's returns. And it's just detailing the logarithmic nature of how HEX moves and how the price performance is going to continue to just impress over time. And the important thing, the critical thing to understand is that the longer you hold HEX after buying it, you're always going to be an owner of this curvature. The difference is going to be what this value is at the end of your ride, because it's always going to be following the T-share price, right? And HEX is designed to do that, and we'll see that in a little bit. Um, Now this is the post Big Payday chart, and we're at day 204, and this is just incredible performance. We have officially flipped Bitcoin's all the Bitcoin's halvings, and the post Big Payday is essentially what we're looking at for HEX, which is just the price action after HEX's only big halving, which is similar to Bitcoin's halvings. And that's what we're comparing the price performance of on this chart, is each respective halving that Bitcoin has had, first, second, and third, which occurred on these respective dates noted above, which reduced the mining rewards for Bitcoin miners over time, thereby reducing the amount of inflation that's hitting the system over time. But the system is still inflationary. It's not deflationary like people like to believe. Otherwise, you wouldn't have Bitcoin halvings, right? It's pretty simple. But the important thing to highlight here is that HEX is at 1,384 rounding up, while the first halving is at 846 or 847 rounding up. The second is at 142 rounding up, and the third is at 229 rounding up. But here's a beautiful thing to note: we are leaving Bitcoin behind in a meaningful way. 63% above the first halving, 878% above the second, 503% above the third. This is just phenomenal performance, and this is all post Big Payday, which was supposed to be the rug pull. So much for that. We'll keep going. So this is beautiful here. This is the T-shares versus Ethereum. T-shares versus Bitcoin, orange line is versus Bitcoin, and T-shares versus Ethereum is a pink line. And this is just showing how after a year of consolidation, we are now just marching on higher, finding the value proposition. Uh, at least the new entrants are, right? Because they're paying for it. And if you've been staked in Hex long enough, you know you are now seeing the value that the system is creating or maintaining, better yet, versus the rest of the crypto market. And just to highlight how much the value proposition has increased for Hex over time, it's important to note that at the previous highest peak, Ethereum was only at $400, whereas a T-share was at $134, and Bitcoin was at $13,771, and a T-share was at $134. Now a T-share is at, I think 12. Let's see here. Yep, $1,288.55. Right, whereas the price of Ethereum is at about 2,500, and the price of Bitcoin is about 37,000. So value proposition clearly there. We keep covering ground versus Ethereum and Bitcoin while they continue to lose ground within their own respective situations. Now this is the stock to flow tracker that is dynamic real time. For Hex, you can't really have a stock to flow model like you have for Bitcoin because the data is dynamic and it changes in real time, and you can actually see it. Right? You go to hex.vision.com or you go to hex.vision to see this data. I need to update my source here because some of this data is coming from hex.vision. But you can go to hex.vision for the. But I mean, hex.vision is really just the home base for all Hex data, all types of data you can find there, and you will come to see that you have a stake expiring, just like when stakes expire. You have a data table for that, or a data chart for that, showing you when these stakes are going to expire. And every time a stake expires, that is what causes the T-share rate to ratchet up. And I'll go a little bit into that shortly. Let's just get through what the T-share rate is first. The T-share rate is a dollar cost of a T-share divided by the dollar cost of 10,000 hex. This is what ultimately yields our rate here of 17,914 hex per T-share, right? Where the T-share cost is 1,289 rounding up, and the 10,000 hex cost is $719.29. Now this is crazy, right? Because we were just at $100 the other day, really. And we were at $120 T-shares like the other day. It really feels like the other day. And here we are 10x later, right? And it happened rather quickly. And you know, I explained how this is possible in many videos prior to. This is just merely value accretion and the value catching up with the system, because Hex is designed like that. That's just how it works. The dips are being bought by those that own T-shares every day. And when price moves, right, and those stakes end, it's going to ratchet up that T-share price in conjunction with that price performance, which is going to also give the T-share rate a nice definitive slope, right? And we're going to ultimately see how when the T-share rate keeps going up, the dollar cost of the T-share goes up, and with that, the dollar cost of Hex. Now, what causes the T-share rate to go up? I was asked this yesterday during the live stream, but the live stream was specifically for macro related content and how it affected Hex. I wasn't really there to get into the nitty gritty of Hex. So if you're able to catch this and you were interested in this little question that we had during the live stream from Daniel C, I'll get right into it. So what causes the T-share rate to increase over time is the functionality of how the T-share rate reprices when a stake is ended. And it's by two factors. How big was the stake and how long was the stake, because that ultimately determines what the return was on the stake. And that return is by which the T-share rate is scaled, right? So if you have 10 T-shares after X period of time, your stake ends, the system is going to scale that T-share count depending on how big the stake was and how long that stake was for. I think the max that it normalizes the T-share count for is by 1.3, but maybe it's 1.5. So you would take that 10 T-share count divided by 1.5 if it was a max stake for the max time and the max bonuses, right, for quantity of hex and time in the stake. If it's not, then it'll probably be rescaled at 1.1, which I think is the lowest level on the rescaling. So if you're going from 10 divided by 1.5, right, that's the same as taking 10 and dividing it 1.5 times. So that's going to reduce your amount of T-shares by, what's that number? Give me a second here. Just to give you guys a correct number. Yeah, that's going to reduce your T-share count to 6.67 T-shares if it's at the max. If it's at the lower end of the scale, it's going to normalize them down from 10 to 9 T-shares. But again, that's a function of the duration of the stake you just had as well as the size of the stake that you just had. Right? The bigger and the longer the bigger and the longer that stake is, the higher the scaling is going to be when you exit the system. And that's what's important to understand. And that's what the scaling causes when you're ending a stake. It makes the shares that you can acquire expensive. Because the thought is that you were in the system during a point in time which your ROI is going to compensate for that cost. So there shouldn't really be that much of a gap, even though you're not receiving that many T-shares. So there's a mathematical differentiation there, but it's compensated by the bond mathematics inherent in the HEX system. I hope that answers your question. If not, just reach out to me on Twitter at WhalesOnly1 or on Telegram at t.me/WhalesOnly. And we'll keep going. And now we're going to look at the value proposition for HEX, which is the staking functionality of it, because that's what pays you more crypto, and that's why people buy and stake HEX. So the HEX index is again at 33,086. While the payout per T-share sum line is giving us a count of 2,151 hex per T-share if you've been staked since inception. This is for just one T-share. So if you've had 100 T-shares and you've been staked since inception, you would multiply this number by 100, and that's your payout per T-share per sum quantity, right? That's the total amount of hex you received since day one. Now, to know what that return is, you would simply go to the next chart and look at this number, which is 195,000 on an indexed basis. And just to get the return value, you would subtract 100 from this value here, and that would be 194,974% for one T-share. That's just crazy, right? We're talking no clicking at all, just buying, staking HEX, leaving it be. If you've been staked with one T-share since inception, your return is a whopping 195,000% if you round it up. You're only 25% away. Why not? No big deal. So this is the power of staking. This is the value proposition for HEX. This is why price continues to run up and tag it and come down and just gyrate around this value proposition. And as the value proposition increases with time, right, the scaling is going to increase, which is what we're going to see on this left side, but the price is also going to run up and tag it over time, which we can't see because the scale of the pricing is going to continue to move up through time, right? So the delta seen in the chart over time is going to increase. But the whole fact of the matter is that longer pays better, even if you can't come in with size, right? Because this performance is paid to whoever had at least one T-share. Flat out. Like if they're still in the system for 550 plus days, this has been their price performance minus 100 for one T-share. Phenomenal. The payout per T-share index has increased essentially fivefold is what this value is saying since the start. And the daily payout index, which is the systemic payout, what the system pays out in HEX, has increased 17,000 on the index, which is basically 170x. I mean, that's just, it's crazy. This is just crazy. All right. So here we have the HEX payout metrics. Now, the system paid out 63.4 million HEX at the crossover yesterday. for 610, and the payout per T-share was 5.752 hex, and the total shares is still hovering at 11 million trillion shares. Um, this is just people getting paid. Payout per T-share line is every time the HEX system pays out, which happens daily. The daily payout is a systemic payout by the system, and the total T-share count is the total shares that are being paid out. So if you have 100 shares or 100 T-shares, that number is included in here. If you have 1,000, that number is included in here, and so on and so forth. Now we're going to get into the expiring shares chart. Now this chart is just merely showing the staking activity, right? And that's really what we're looking at on the short end, and how it changes over time. Now we're no longer in May, so we're going to kind of zoom through that just to get to June, just to show how that has been affecting the T-share rate over time. And we started with 40% in May, right? Approximately 2 weeks ago, or 2.5 at this point, and 35% in June at that same time. And then we're going to go through, and it increases to 39% in June while staying stagnant for May, the following day, which is 5/24. Now on 5/25, it increases to 40% for June, and it starts decreasing for May. And we're going to see at the end of May, it's pretty much decreased by half, which is going to cause the T-share rate to ratchet, which we've been seeing over the past couple of weeks in a significant fashion. And June then increases to 45%. And it essentially stays there up until the present day, fluctuating here and there through the 6th, the 8th of June, and finally the 10th. We're still decreasing a little bit. Now we're going to take a look at July and what it's been doing during this time, and it's already increasing slowly but surely through the early parts of June. We start at 21% approximately on June 2nd, increasing, well, not really much of an increase there for, is that right? Or am I looking? Yeah. Oh, I'm sorry, I was going the wrong way. Okay. Yeah, not much of an increase from the 2nd of June to the 6th of June, probably about 1% or so. Same thing to the 8th, and it looks like we're like right here, maybe 25% for July, while still hovering around 45% for June in terms of the cumulative expiring shares uh, for those two respective months. And as always, the HEX correlation is 0. I've gone over this in detail so that there is no further confusion, even if HEX is moving in conjunction with the market for a small period of time. The correlation is always 0. It's only a matter of time before HEX goes back to doing its own thing. And this is versus Ethereum, and here is a correlation versus Bitcoin, which is 0 as well. And what I like to highlight on this scatter plot graph here is that the HEX returns are on the x-axis, the Bitcoin and Ethereum returns are on the y-axis. And the important thing to note is the fact that HEX is primarily in the positive side of the x-axis, whereas Bitcoin and HEX are spread out, Bitcoin and Ethereum are spread out on the y-axis, not positively skewed, right? And what that means is that the returns for Ethereum and Bitcoin are not primarily on the positive side of their y-axes, whereas HEX is primarily on the positive side of its respective axes, which is the x-axis. And when professional investors discover this, it becomes a no-brainer which is the best performing asset, and the decision to allocate is thereby made pretty simple. And that's the important thing to realize with this chart. Now, this chart isn't updated because clearly the HEX price is at 7.2 cents when I updated this chart. But the fact remains that this, which is what I'm actually tracking with this data, which is the correlation between the T-shares and the price of HEX, is essentially 1. It's a strictly positive correlation, and what that means is the further the T-share rate continues to elevate, the higher the dollar cost for the T-share will be, and thereby the higher the dollar value for HEX. Because you have to remember, as I explained earlier, the dollar value for HEX is a function of the dollar cost of a T-share, which is a function of the T-share rate and its essential equation, which is a cost of both the T-share and the cost of 10,000 HEX. So it's important to realize it's kind of a circular system because it's there to keep itself in check. You don't want any part of the system to escape whether that is the dollar cost of HEX or the dollar cost of T-shares or the T-share rate itself. We want those three items to be in line with respect to their true value, and that's why it's important to keep this in check and keep this in mind and realize that this is a positive, perfectly positive correlation. The correlation is 99.9 plus percent. It doesn't get any stronger than that, and it's been that strong since early May. And I'm going to keep updating this chart over time just to keep the community aware of the correlation and its strength, because it is really the most important chart now that has been discovered for HEX. And we'll keep pushing it out. So here we go. As always, the price for HEX was 7.193 cents at the crossover last night when I recorded this data. New all-time high on the crossover, giving us a payout per T-share with respect to 5.752 HEX of 40 cents, 40.48 cents, almost 40 and a half cents, giving us an adjusted HEX value of 48.567 cents. So what is the adjusted HEX value? The adjusted HEX value is merely the future valuation of HEX and what it's going to be, whether people like it or not. And it is a mere sum of the cost of one HEX plus the cost of the HEX payout per T-share, which for yesterday's crossover was 5.752 HEX. Now, why am I doing it like this, given that it requires 17,000, almost 890 plus HEX to acquire one T-share payout? So the reason is because if we look at this chart, this is the reality, right? The HEX price to earnings ratio is letting us know that for every single HEX that we're purchasing, we're ultimately receiving a payout that is 1/5 of the potential price value, right, of HEX. That's one way of looking at it. The other way of looking at it is that when you buy HEX and stake it, you earn back that return in 17% of that year. That's also what this number means. So no matter how you want to slice it, right, you ultimately want to look at HEX as a 1-to-1 ratio. HEX is always one HEX, and that's the value inherent in the system. And that's why we're looking at it with one, because ultimately a HEX is going to be worth $1. It's not going to be worth cents forever, and that's the point of the value proposition for HEX. And that's why I look at it as one versus the whole HEX quantity that's required to obtain a T-share. Because ultimately this valuation is going to continue to increase, and we have a long time before it gets to one, but it's important that people understand it is one ultimately. And once we get there to that point where the HEX PE is 1% or 100%, and the scaling should be not currency but just numerical. So I'm sorry about that. I'll make sure that doesn't happen again. But long story short, the whole point is that this is ultimately going to attain one, and once it attains one, that's when the T-shares actually start to look deflationary and get really, really expensive, and that is what's going to drive HEX to move higher in price versus the payout per T-share that's being received. Now, this is way on down the line. This is not anytime soon, because HEX is only mere cents right now, and the system is designed to do way more than a few cents. And it's going to adjust with that, right? And we're going to see all of those changes happen over time. And we're going to track them real time for the community and be sure that we're able to just, decode what is actually going on, because that's really important. For now, the important thing to understand is that owning T-shares is key. Owning T-shares is what drives the value for HEX higher. And we see that in this correlation chart. And it's been cemented for over a month now, so we're going to keep watching this very closely with the intricate understanding that is what's going to continue to drive the value proposition for HEX, which is in conjunction going to continue to drive the price value for HEX, as well as the HEX price to earnings ratio, which is just going to merely be the barometer of value in the system, which, as you can see, is significantly below the all-time low for the S&P price to earnings ratio, which was 551% at the lows of World War I, which ended there shortly thereafter. And just as a reminder, this is where we are in terms of time, given the network effect that we've experienced in Google, Microsoft, and Apple over time, as well as Bitcoin. Right? This is how markets work. So let's just keep that in mind, and thank you guys for tuning in. I'll promise to make a few more of these. It's been a while. Thank you guys for watching.